Hi everyone, my name is Gyanendra and welcome back to another episode of my channel Accounts DULAL. This video is the second series of the company accounts issue of debentures for cash. Here I am going to show you how to pass journal entries by taking the practice question which was already given to you in my previous episode. The steps involved in passing the journal entries were also been explained to you in my first series. If you have missed the first one, check the link given in the description down below. Are you all ready? Here you go. Oh yes, make sure you are with me till the end. In the end, I am going to speak about some important terms used in this episode. So here we go. I have a question with me. Now let's read the question. ABC Limited issued 5,000 10% debentures of rupees 100 each at a premium of 10% payable as rupees 20 on application, rupees 50 on allotment including premium, and rupees 40 on first and final call. The company received applications for 7,500 debentures. The company refused allotment to applications for 2,500 debentures and allotted to the remaining applicants in full. All the calls were made and amounts received. Pass the journal entries. Now let's see the important points here. ABC Limited issued 5,000 debenture. So this is the number of debenture. This is the number. 10% debenture here, this is the name of the debenture, and 10% indicates rate of interest. Rate of interest. Of course, here we don't need this. Of rupees 100 each at 10% payable as rupees 20 on application. So here 10% payable, this 10% is the premium, which is important in this question. This is a premium. Rupees 20 on application, rupees, this is your first installment, allotment, this is the second installment, and first and final call, this is the third and the final installment. Now let's go ahead with the journal. Before that, we need to understand this thing. So here you have face value, which is rupees 100. Then here you have a premium. Premium is given to you 10%, and premium is calculated on face value, so it is 10% of face value. So this gives you 10 by 100 into 100, so your premium amount is 10. So we have the issue price, that is face value plus the premium 10, so you have altogether 110. This 110 is paid in 3 installment. The first installment is the application, which is 20 rupees. Second installment is this allotment, 50 rupees, and the third installment is final one, which is 40 rupees. Now, as we know, we need to pass the journal entries. So we will pass the journal entries taking the help of this thing. This is for application, this is for allotment, and this is for first and final call. First and final call. Now, as we know, the journal entry for application will depend on the question. Now let's see here how many are there. Yes, we see in the question that refused allotment to application for 2,500 debentures. So the application money on this 2,500 debentures will be refunded. So there will be 3 journal entries for the application. One is for received, another one is for transfer, then the last one is for refund. After this application, we'll go on to allotment. For allotment, we'll make 2 entries, that is due and received. Similarly, for final, first and final call, we'll again make 2 entries, that is due and received. Now the journal. So the name of the company here is ABC Limited. So we write here books of ABC Limited journals. I'm not making the format for the journals here, but I'll show you what are the things included here. The first column is date, then you have particulars, laser folio, then this is for debit amount, and then here you have the credit amount. Now let's say application received is here 7,500 debentures here we have. Then refund is here 2,500, so refund is 2,500 here, and allotted debentures is this 5,000. So here we have allotted 5,000 debentures. Now we'll proceed with the journal. No date, so question mark. So first is for application received. So when the application received, I have already given you the journal. Now let's go ahead. Application received is bank account debit to debentures application account. And how do we write the amount? Bank account debit to debenture application account. Here the debenture application money has been received for 7,500 shares at the rate of application 20. So when we add this one, we get 0 0 0 3 2 5 10 10 2 7 14. So you have 1,50,000. Debenture application amount is also 1,50,000. Now next entry is for transfer. So what are we going to transfer? Debenture application account. So this is debenture application account debit to, it is transferred to what? It is transferred to 10% debenture, as the name of the debenture is mentioned here. So to 10% debenture account. And what is the amount? This amount will be transferred on the debenture allotted, which is 5,000 here. So 5,000 into the application amount, that is 20, so which gives you 1 lakh. Please excuse me for this format, it is not very clear. 1 lakh. Now next is for the debenture application money refunded. As you know, there is a refund for 2,500. So here you have what is refunded? Application money. So we got to write debenture application account debit to bank account. It is refunded on how many shares? It is refunded on 2,500. So 2,500 into application amount is 20. So you have here 50,000. 50,000. Now 3 entries are done for the application. Now we'll go on to the allotment. For allotment, 2 entries. The entries are, the first entry is for allotment money due. So you have the entry debenture allotment account debit to 10% debenture account. And since now there is a premium here, there is a premium of 10 rupees, and this premium is included with allotment. So here we go to write to securities premium reserve account, securities premium reserve account. Now debenture allotment account debit will be how much? Will be on the allotted number of debenture. So this is 5,000 into the allotment amount, which is 50 rupees. So 50 will give you 2,50,000. 10% debentures amount will be on 5,000 debenture at the rate of, okay, this I'll come later. Now let's come to the securities premium reserve. This will be on 5,000 into the premium amount is 10 rupees. So into 10. So out of 50, 10 rupees goes to the premium, so remaining 40 will go to the debenture. So your debenture account is multiplied by 40, so it gives you 2 lakhs here. And securities premium reserve will be 50,000. So this is the entry for allotment money due. Now we go on to the allotment money received. So allotment money received is bank account debit to debenture allotment account. Debenture allotment account. Now this allotment money has been received on how many debentures? Allotted is 5,000, so it is 5,000 into allotment amount is 50, so into 50 will give you 2 lakhs 50,000 and 2 lakhs 50,000. So this is done, allotment is done. Now we go on to the first and final call. So first and final call money due. The entry will be debenture first and final call account debit to 10% debenture account. Now the amount will be 5,000 into this 40 rupees, so it gives you 2 lakhs. The same amount will also come here, 2 lakhs. Now first and final call money received, so you have the entry bank account debit to debenture first and final call account, and we'll have the same amount, 2 lakhs and 2 lakhs. This is your first and final call money received. So here this is the end of the journal. We have done with the journal, but when you read the journal, follow the proper format, and this is the format that I'm showing you here. Let's draw the format. Here we have the columns are here. So this first column is for date, this is for the particulars, this is for a ledger folio, this is your debit amount, and this is your credit amount. Then we need to write the heading, and the heading here in the question will be books of ABC Limited journals, and write the journal with the narration to get good marks. So we are at the end of the video session. So I'm going to speak about some of the terms we used in this episode, and these terms are FV, that is called face value. It is a nominal value of security, shares or debenture as stated by the company. It is also known as original cost. So it is the nominal value or original cost of shares or debenture. Then I spoke about IP, that is issue price. So issue price here means the price at which securities like shares or debentures are offered for sale by the company. So you can say this is the offer price. Then this issue price can be at par, or it can be at a premium, or it can be at a discount. If issue price is equal to face value, it is called issued at par. Now, if issue price is greater than the face value, it is called issued at a premium. And this premium is taken to an account called securities securities premium reserve account, and it is a credit item. When issue price is less than the face value, it is called issued at a discount. Issued at a discount. And this discount is a loss or considered as an expense. That is why it should be debited in the journal. If you have found this video useful, give it a like, comment, share it, and subscribe if not already. I love to have your feedback. Thank you and see you again.